Barron's calling Nordstrom, we're going to totally switch gears here, a department store survivor, saying the stock still has more room to run. It's down almost 22% for the year. But get this, surging more than 160% in the last 2 months. It is our call of the day. Joe, you like Nordstrom here. Why? Joe? Okay. We're going to go to John because I think we're having some technical difficulties there. John, I thought the mall was dead. What's going on with Nordstrom?
Well, they don't waste their time in a lot of cities that aren't going to work for them. This is I think, more of a luxury retailer, Morgan, than a lot of people realize. They love going into these stores. They just were having that new one open in New York, and then the pandemic hit. But I think that concentrating on the markets where they think they can sell, rather than just having a gigantic footprint, which is what a lot of the other retailers went for, they're regretting those gigantic footprints in many cases. I think Nordstrom being much more specific to geographic areas, Morgan, is going to serve them well. And I think there's still the possibility that the family could decide to take them private. But after this big surge, I think that's going to be a much tougher move.
Carrie, I want to get your thoughts on this. I mean, I know you mentioned at the top of the show that one of your picks for 2021 is Home Depot, so you're certainly looking at the home improvement retail space. But what do you think about apparel and about a name like Nordstrom that is so exposed to the mall, especially given the year we've seen for mall operators?
Sure. Morgan, it's a very interesting question because here you have a company, it was a premium company, a great department store brand, and now it's facing all types of upheaval in its industry. I'm not just talking about e-commerce and Amazon. I mean, what happens to Macy's? What about Saks and Neiman Marcus? So on the luxury end, you've got a questionable future for the big players. And then Macy's, which is, I would say, slightly below Nordstrom, trying to move itself, position either a little bit more upscale or going to cut back on a lot of their retail locations. And Nordstrom has to sort of play their hand very carefully, not knowing what the other participants in the industry will do. There were about 6 years over the last 10 where the company earned more than $3 a share. I think that's unlikely for a few years. If they can get into the twos, $2.20 to $2.50 a share, put a 20 multiple on that, it can trade over $40. It can trade into the mid-40s. That would make it an attractive purchase here. But there are a lot of ifs in that whole statement. And I'm just not prepared to commit right now. They'd have to start to show more cash flow, begin to pay the dividend back. You know, I just don't know. I think it's a good company in a I'd say well-positioned in an industry that's going through major disruption, and maybe they can be a winner, but not one that we would put money into right now.
Yeah, and I think to your point, fewer competitors out there right now, given all the shakeup that's afoot. I will say, as a consumer, it does seem like they're stepping up their e-commerce game a little bit. Joe, I want to get your thoughts here on Nordstrom.
Yeah, I'm back. Yes, the e-commerce game is very strong for Nordstrom. I listened to the comments from everyone else. I agree. Listen, let's not have the recency bias as it relates to Nordstrom. If you're going to take a position in it, let's make sure it's very small. They are high-end fashion. They do have brand recognition. I'm going to introduce Dillard's, DDS, into the conversation because if you are thinking about buying Nordstrom, I think Dillard's probably is a better opportunity because of its geographic location for its stores. It's in the Southwest. It's in the Southeast. Economically, I think there's better viability with their store location. So give consideration to Dillard's as well.